What is going on, everybody? Welcome back to another video. So today I just want to do a complete breakdown of my strategy, just the different parts of it and how I trade it personally. So let's hop right in. So my main strategy, main way of entering trades is off of fair value gaps. If you don't know what a fair value gap is, I will try to draw this out very quickly. So basically, fair value gap, get a candle like this, get another candle, and then you get a third candle. So it's a 3-candle pattern. And the only thing that you want to make sure is that, say we have a wick here and we have a wick here, you want to make sure that these wicks are not intersecting. So this is your impulse candle, and you want to make sure that this candle, a wick, body, whatever, is not intersecting this other candle. So if this had come down to here, that is not a fair value gap. Anything above that, where you get it to like here or something, you have a fair value gap. So that, the way you draw that out is right that. You go to this wick low, to this candle high. If there was no wick there, you'd move that down to like that. But let's say we have that wick high for the time being. So this is with an uptrend structure. Just pretend these are green or red candles, whatever. I'm just keep it in gray for now to simplify things. But what I'd be looking for is a push back into this fair value gap. So let's say we got a nice candle into it here, and then what I'd want to see is a good wick reaction from it. So for me, to get me into the trade, I like to see a good reaction, in this case from buyers, since we're playing on an uptrend entry. So if we had come into the FVG and we'd close something like this, like right inside of the zone with no real reaction from buyers, I probably would wait for either another candle or some type of other way of showing bullish structure, maybe a 1 minute break of downtrend structure or something of that sort. But typically I like to just see that nice reaction from the 5 minute, some type of wick reaction show from buyers there. And on these candles, I'm looking for on the 5 minute chart. So this candle, I'll wait for the retest of the FVG, wait for this 5 minute close. My stop would be below this low, and I'd be targeting first. Ideally, like it more candle close more like that. So ideally, could target that high day in this case first as a first price target. The stop gets moved to break even, and then you just let the rest run. So that's a little bit of a breakdown just of fair value gaps, how I like to enter my trades, and going a little bit more into it. Something I've incorporated that's pretty key for me is structure points and understanding context of where we are. Because there's a lot of FVGs that get created, more so probably the 1 minute. If there's 5 minute, there's less that get created per day than something like a 1 minute. But still, for me, I don't just take any fair value gap that forms. Like, it has to be, for me, it has to be with the trend, has to make sense with the context. Context is a big thing for me. Let me just pull up an example of this. So we take actually, I'll go back to the SPY. So this is a key area on the SPY. If we take a look at the daily, you can see why. I know this is a little messy, but see this previous strong supply point turning into demand, daily break and retest point, key area for me. So if we'd gotten a downside FVG like right here, I wouldn't have been interested, because context to me is still very important, because you'll still get those FVGs that form sometimes. But if you're going into a key level like this, to me, I wouldn't be taking this trade. And even if it worked out, it wouldn't matter to me, because I've gotten burned on fading into key levels like this numerous times. So that's just an adaptation I've made personally. On the other hand, if we had flushed below this zone and formed an FVG, I would have been very interested to target these pre-market lows. But another situation where, actually you can see a little better on the cues, context comes into play, is when we're in balance range. So balance, all I mean by that is when we have action like this. Clean this up really quick. Oops. Get the clean. When you get balance, you get sideways action, you see chop, you see consolidation. So this is all I mean by balance, where the market's moving sideways. You don't have any big moves, trending moves in any direction. You just have sideways balanced action. So this is balance for me. And when you have balance, you have pretty clear extremes. And by the extremes, I just mean the high extreme would be the high of the range right here, and the low extreme would be the low of the range. So while we remain within the balanced range, I'm looking to either reject, fade, puts, shorts, whatever at the high, or calls, longs at the lows. Until we break this range, that is ideally what I'm looking for. So bring that all back to the context aspect. Oops, back over here. So getting back to the context aspect, when we're coming into imbalanced range conditions, it's a little different for different market conditions, but in balanced conditions, I don't like to fade, into these extremes. So say we had an FEG entry that showed right here, and the entry point would have been, had the wick, and then it came back, and this would have been our entry point here. I typically wouldn't like to take that trade just because we'd be fading into those balance range extremes till that range breaks. For me, again, just got burned on doing that too many times. So that's just, again, another adaptation I've made where I don't like to fade into those balance range extremes when we're in those type of market conditions or any key zones, just any conditions. So that's about what goes into the strategy in terms of how I enter and what I'm looking for context-wise. So breaking it down a little bit further in terms of different ways I like to enter. So there's a few different ways I like to take my entries. So the FVG for me is typically a trend entry. So balanced conditions are a little bit where I'll try to pull back a little bit, be a little bit more conservative. But in typical trending markets, I'll either look for, you could say, pretend this wick wasn't here, but see that wick like close at this candle there. Look for that close there. Look for this candle come back into it and play that continuation to the upside. The other way I like to play it would be counter trend. So for me to play counter trend, especially on days like today where you see we just slow grind it up all day, I don't like to try to predict the tops. There's nothing wrong with that if that works for you. But for me, what I found, especially on clear trend grind up days or grind down, today happened to be a grind up, what I like to look for is a break of structure and then look for a downside FVG to play the lower high on it. And I'll show you guys what I mean by that. So structure points for an uptrend, all that means is a down candle and then an up candle, a down candle and then an up candle, down candle, then up candle. So these are your structure points. So down candle, up candle, this is the lower between these two, so that's your high or low. You get a down candle, then an up candle, this is the lower, so this is your high or low. I don't know why my mouse is kind of lagging right now, but down candle, up candle, this is your high or low. And you see for the whole day, we never really, I don't know what is going on with my mouse. It's like lagging right now. Ooh, I don't know if you guys can see that, but anyway, what I'd be looking for is what breaks this uptrend structure. In this case for me, it would be a close below the higher low point. So since this is the lower of these two candles, a down candle, then up candle, higher low, what I'd want to see, if you mark that out there, would this candle come here? If we'd come down something like this, got a nice red candle like that, we broke that uptrend structure. Once we close below this point, uptrend structure is now broken, and with that, I then like to see a nice impulse candle here, create a downside FVG, and we could say next candle maybe looks something like this. You get a small green candle, a little bit of a top wick or something like that, and then what I'd be looking for is from here to there. That would be our FVG. I'll be then looking for, as I mentioned, a nice push it back into it, something like this, where you get a good top wicked candle, bang, nice push into the FVG, and now look to enter on the close of this 5-minute candle, risking above this high, play this to the downside. And the reason I do that is because instead of trying to predict the top, I like to see that structure get broken, create a new structure, and I'm playing the lower high of that new, now in this case downtrend structure being formed. Instead of trying to predict when it's going to form, I let it form, and I try to hop on the wave of that once it has been a little bit more established. And this doesn't mean it's going to be 100% working every time, but for me, this is just something I found works a little bit better for my entries trying to play counter trend personally. So a third entry strategy, which I don't typically love as much, not something I do as often, but something that is viable, is breaking it down to the 1 minute. So when we get a counter trend move into a zone, the way I look to enter is a 5-minute, as I just showed, a 5-minute break of the structure, create a downside. If it's supply zone, create a downside FVG, look for the entry on the retest of it. But if we test a zone and it's not a counter trend move, something like this where we open up the zone and it's not a counter trend, what I'll then look for is a 1-minute break of structure and return to equilibrium. So you can see here, same thing on on the 5 minute where you get those structure points. We broke our uptrend structure here 1 minute wise. The 1 minute's a little bit more crazy. You got to understand that going in. You got to get a lot more signals. But up candle, down candle, this was our lower high. So you see up candle and down candle. Since this is the high point, that's your lower high. And then your next up candle, down candle, did not close above here, so did not break that downtrend structure yet. Then you get an up candle, down candle, this is the high. And this candle right here, we broke it. So we broke right above that downtrend structure right here. You can see here, this is the high of those two candles. If I can mark it, there we go. See up candle, then down candle, that's a lower high, closed above it. So downtrend structure in 1 minute has been broken. And once we do that, look for the high point to be established. And then we look for a return to equilibrium, which just means the 50% on the fibs. Just once you get to reach that 50% point, you're buying in a discount. When you're buying above the 50%, you're buying in a premium. So look for that, return back to the equilibrium, and give an entry here. This is just, I typically don't like to trade just off that 1 minute. I like the 5 minute better just when I trade it. It gives a little less chaotic entries and stuff, but it did work out today. I saw this live, but I decided to sit it out. Ended up giving a pretty good move today, but again, no need to force. Something I'll probably get more reps in before I feel a little bit better taking it, but overall, just I like to stick more with the 5 minute. But either way, another way to enter. Again, I typically like the 5 minute better. Just a little bit cleaner action, a little less chaotic. The 1 minute can just gives a million different signals. So 5 minute can be a little bit cleaner for me. And then the last point that goes into my strategy is the supply and demand zones. So for those, I draw those a little bit differently than you might see them from other people. That there's a million ways to draw them, but for me personally, what I like to do is first, we'll just draw this from scratch here. I like to get my general idea of areas on the hourly. So I'll do something like, we'll get something like this, where you see supply, broke above, clear demand. Anywhere you get big imbalance moves, or you get areas that get used as supply, flipped into demand. In this case, I like to see those areas get tested, and I like to use those as my zones. So maybe adjust this down a little bit just to match some of those wicks there. But again, you can see, get my general idea from the hourly, and once I have that, what I'll then do, I'll tighten this down to like the 5 minute, something like the 5 minute or the 1 minute, and I'll then just scroll to all the price action we've seen at that zone, and I'll look to tighten it up a little bit. So you can see here, when we tap these zones, that's that low of that zone, hit pretty much to the T there, pretty much to the T right here again. So for me, if I'm trading on the lower time frames, I like those zones to be adjusted for those lower time frames. See, I'm not going to go fully back into it, but you can see that's that general idea of that same zone we had. You could even maybe adjust this down for previous day's action. And that's the other thing too, I like to have the zones be respected to where price action is tested the most recently. So say like a day or two ago's price action is going to hold more weight to me than price action from weeks ago or something like that. So again, another example, just get this zone, tighten it down, go on the 1 minute sometimes, and then I'll really just look to see where are we respecting that zone. To me, you see right here, 4-4, I like that spot. Could even maybe tighten this up to 8-6 or something like that, or I like the 8-5 better. And then something like that, where you get those zones, that area, marked out, go back to the 5 minute, and then that's our zone from today. So you see where our key hold spot was, that key daily zone, marked on the hourly, tightened up in the lower time frames, and then you get a pretty large move from it today. So that's pretty much all that goes into my strategy. I like to keep it pretty simple, just trading the raw price action, volume, areas of interest, key zones. You see again, that was that zone we just drew there. But again, that's about all I got for today. Want to just make a quick one, break down my strategies as the best I could. Hopefully this was helpful for you all. Appreciate you guys for coming, and I'll see you in the next one. Peace.